Welcome to the second episode of the Empower Show. Today we'll be talking about term policies with living benefits. Let's get into it. If you're new here, this show is to purely talk about entrepreneurship and life insurance retirement planning. Our mission is to bring back hope and free enterprise to American families and financial literacy to American families. In this channel, we'll be talking about life insurance, term, permanent, retirement planning such as annuities, 401k rollovers, and debt solution. But today we'll be covering term life insurance policy with living benefits because you may be thinking I have a term policy, however, it only covers me when I pass away. But living benefit completely changed that with a new type of policies, and we'll dig in more into that. Before I cover living benefits, I want to just get down the basics of term policy. So, term policy is one of the most affordable life insurance policies you ever find. It's temporarily, like the name of it sounds, it's supposed to cover you anywhere from 10 to 35 years maximum. A lot of companies only do up to 30 years. However, it's temporarily within those terms. So let's say you are 24 years old, you'll get a 30-year policy that will cover you until you're 54 years old. But anything after that, it doesn't cover. So it's temporarily, like the name of it sounds, whatever duration you signed up for, that is the duration you'll be covered for. There are term policies called renewal term, meaning it will renew once the policy expires. However, the premiums that you'll be paying will be for the age that it renews. So if you're covered from 24 to 54 and your term will renew after that, the price that you'll get is for the 54 years old. It will not be for the 24 years old. Why does that matter? Because term policy is one of the most affordable policies, meaning that if you say your policy is 30 years old, you get a $500,000 coverage and you're only paying $30 a month, you're paying $30 a month for the duration of that term. So for the 30 years, you'll be paying $30 a month and you'll get the $500,000 coverage. God forbid something happens to you, your family will get that benefit. That's pretty much the basics of it. So the premiums depend on your age, your health, and lifestyle is the best way to put it. If you've had a lot of, risky or you've had accidents and all that, they will count those in, to give you the premium. You may get a higher premium due to those standards. However, the younger you are, the more affordable those premiums would be for your term policy. A lot of people like to get a term policy because it's kind of like a starter package. You get the coverage for $20, $30, $40 a month. And as soon as they get more used to the premiums, they upgrade themselves to more of a permanent policy. Say you are a 24-year-old, you get a $500,000 coverage for $30 a month, and you're making those premium. First of all, the purpose of that policy could be to pay off your student loan. Maybe you graduated with a $500,000 loan of student loans, and you want to make sure while you pay off that debt, your family doesn't have to worry about, going bankrupt if something happens to you. Maybe you purchase a business, maybe you buy a house, you have a lot of debt. Those are great reasons to get a term policy. Maybe you're starting a family and you don't have the means to pay $100 a month for a permanent policy. A term policy will definitely be able to cover you. And traditionally, we have death benefit only, meaning your policy would pay out in case you passed away. And a lot of the policies have a terminal illness rider, meaning that if you have 24 months to 12 months left to live, your policy would also pay out while you're living, in case of terminal illness. So those are the two ways that the policy could pay out. However, with a new type of policies, you will have living benefits, and living benefit is beautiful because they've added two more conditions that gives you allowance to use your death benefit while you're living, and that's critical illness and chronic illness rider. Simple words, critical illness could be stroke, heart attack, cancer, coma, liver failure, kidney failure, paralysis, blindness. If any of those events happen, the doctor will send a note and you'll send it to the insurance company, and they'll give you portion of your death benefit while you're living, and that will save you a lot from going bankrupt due to paying off your medical bills or taking care of your bills while you're recovering from an illness. Under chronic illness, you get more benefit, meaning you get to use your death benefit in case you cannot do the daily activities of living. those include bathing yourself, continence, driving, transferring, taking a shower, and being able to eat by yourself. If you cannot do any of those 2 out of the 6 I just mentioned, you'll be able to use your death benefit while you're living under chronic illness rider. They've also added cognitive impairment under that, and a lot of new companies that I work with, they have added Alzheimer's as one of the conditions for you to be able to use your death benefit while you're living. So that gives you a lot of more reasons to be able to purchase a term policy, because you do not per se have to pass away to use the death benefit. You could, God forbid, get in a car accident. Worst case scenario, you cannot walk or take care of yourself, and your policy pays out, and you can make that payment toward anything that you like. You can pay toward your medical bills, your bills at home, or you could put a down payment on your house if you really want to. The money will be given to you in a form of tax-free check. You can deposit it and do whatever you want with that money. Where does this money come from? So the money is purely from your death benefits. So I'll give you an example. We had a gentleman in Arizona. This wasn't one of my clients, but one of my colleagues' clients. He had a term policy for $500,000, 24-year-old guy. 3 months after having his policy, he gets in a car accident and he goes in coma. They didn't know how long the coma would last. It lasted 9 months, believe it or not. But imagine your son goes through that. I mean, as a parent, I don't have any kids, but I'm sure as parents you can relate that all you want to think about and take care of is your son, to make sure they're okay. So they paid out a living benefit to the family in the form of $386,000. They gave a lump sum check to the family. Again, the guy is okay. He got out of coma after 9 months, but thank God to that check, because the family was able to properly set up themselves to be able to be with him and get, be supportive to him and get him out of the coma. The check was given to them deducted from the death benefit. So he had a $500,000 coverage, and you deduct $386,000. The rest of it will be given to them if he passed away within the term policy, because if you're not, it is a term policy still. So yeah, it definitely can help you in a time of need. I have another client who breaks one of her ankle at work and doesn't qualify her for living benefit because she could still do her daily activities, walking, dressing, driving. However, 2 weeks later at home, she wanted to use the restroom around midnight, didn't want to ask for help. Unfortunately, she trips and she breaks the other ankle at home. So she went from walking to wheelchair within a couple of weeks. However, because she had living benefit, I don't know how much coverage she had, but she was granted $86,000 in a form of lump sum check. And believe it or not, that was her paycheck that covered her at work. So she got 1 year salary worth given to her, and she was able to recover in one of the hardest time of her life. So those are just a few examples that we've had in our company when it comes to living benefits. If you have the traditional life insurance policy, like term policy, I will highly recommend that you look into upgrading it. You'll be surprised how much you could save on those premiums, obviously depending on how long ago you got that policy. Another reason to get a term policy is insurability, meaning, God forbid, if you encounter a sickness like cancer that doesn't qualify for life insurance anymore, you could simply convert your term policy to a permanent coverage without qualifying for the policy, meaning you will be paying a higher premium because you're converting to a permanent policy now. However, there's no qualifying condition. You could convert and change that policy without them doing another round of underwriting to see if you're insurable. You pretty much get the covered guaranteed to you, just paying a higher premium. So to summarize, term life insurance is a temporary coverage, like the name of it sounds. However, because it's temporarily, the premiums are low, and with a new type of life insurance, you can use your death benefit while you're living. Hope you have brought you value today and you learned something new. If you haven't seen the first episode on this channel, why I went from human resources to life insurance, I highly recommend you watch that video right here. And if you have, I'll see you on the next video. Until then, be well.